Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 27th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Real quickly here, the market's holding within narrow ranges after the Friday rally. The ES sitting at the highs, 44% of ADR right now. The NQ's at 43% of ADR. You can see how narrow the day's range is after that Friday rally. So from last week, again, holiday shortened week, you see a nice continuation up and finishing very, very strong on a Friday. One of the biggest moves we've seen since the week before the Memorial Day weekend. These last 2 days were Thursday and Friday before the holiday extended weekend. We will have another holiday extended weekend this weekend as we head into the 4th of July weekend, which is next Monday. So we could be looking at further lingering higher type of price action here as the market sees a melt up phase into the holiday weekend. Keep in mind the way we closed last week, closing on the highs. Here's the previous close, here's the previous high of the week. Previous midpoint is down back below 3,800 by a little bit. It's, say, right here. So again, typically speaking, when you close at or near highs, watch the previous week's high and close for an early rejection. That could push price back into the range a bit. Once price pushes back into the range, you want to see it be able to hold, defend, and then push out of that range heading into the end of the week. So a checkmark trend week up could be in play here. The other thing is, again, even if this market does pull back and bounce, it may not need to continue higher. It could just kind of sit here and hold these gains into the new holiday weekend here coming up this week in the new month of July. So basically the first 6 months of the year will be done here on Thursday, and that'll be, again, the close of the second quarter. There could be some window dressing there, but at the same time here, this thing's lingering up a little bit. Keep an eye on the previous high and close of the week. Any early rejection there, say a failure to hold 39.15, that opens up some downside back into 38.50, maybe a bit below. And from there, you want to be able to see the market pick it up and take it higher. Taking a look here at the NQ, similar price action. This one's sitting right on the previous week's high and close as well, basically right here. Previous week's midpoint is 11.711. 11.7 is right there, so about 11.7s. That's the previous week's midpoint. Again, that's a far way down. The idea would be if we pull back, you drop into the pivot range. The top of the pivot range is 12K. Then you have 850. Then you have 711. So any drop below 12K could be an opportunity for bulls to defend, and then you look to check mark trend week this thing higher toward 12.4 or perhaps even beyond. Now keep in mind we do have these narrow ranges here that we've seen expansion from 1, 2, 3, 4, 5, 6, 7, 8 days. So we could quantify that down here as well. Bring this up to 8 like that. And what you'll notice here again is that compression now seeing expansion on this day here. That expansion takes you to about 1,800 points on the indicator here. Now again, keep in mind, using an 8-day look back, this thing is looking back 8 days. 1, 2, 3, 4, 5, 6, 7 days, 8. And so it's using this low right now to calculate this target. Now, that would be the tendency normally. You could also use the breakout day. Look at the breakout day and then forecast higher. That will give you a farther target as well. Again, the upside move right now has been limited this year. And so again, even if we do see a decent bounce or we see a continuation this week, it doesn't mean that the overall downtrend won't come into play at some point and push this thing right back to new lows. So keep that in mind. Even though we're pushing a little bit higher right now, this market could get trapped and reversed very quickly at some point, sooner than later. Taking a look at crude oil here, you'll notice crude oil trading 107.85 at the moment, bouncing off the 102s last week. This one was able to close higher on Friday, and the early pullback today has been defended so far in the pre-market hours. We still have this kind of rounded behavior here developing on the right side. Price never got quite as low as the 95 bottom of the market structure. It did get to 102s here, 101.50. That's a pretty deep pullback. Again, as long as price remains below 115, we are basically stuck between 95 and 115 until further notice. Once it's able to reclaim prices above 115, perhaps we can make a move higher. But as of right now, failing at 115 suggests that we are stuck in the lower edge. We could be returning a little bit higher right now. But again, this is a market that could overall remain in the range 95 to 115, and on the way down here at the moment would suggest that keep an eye out for what could be a continuation toward 95 until proven otherwise. Taking a look at Bitcoin. Bitcoin right now only down 0.5% at the moment. It's still within a narrow range. We've talked about these narrow ranges before. We've talked about the lack of bounce and juice out of these markets. Right now you got about a 4 to 5 day, let's see, that's 9-day narrow range here. So let's bring up 9 days narrow. And that's basically giving you from here to here. There's your reading, and there's your point total, 12,745. So you could be looking at a 12,000 point move coming up. Earlier we mentioned if this thing failed at 28K, we'd open up 18K. From the initial high here, 31K, this thing got down into 20K. So it basically lost 11,000. We were looking at 12 to 13,000 point move. Now this thing is building up another move that could take us between 10 and 13,000 yet again. So if we see another one of these days here where it pokes higher and then closes, you know, with an outside day down, that high could be used as a push downward. From 22,000, we could be looking at a target down in the 9,000 range. So this could be a significant move up ahead if this thing cannot, again, find some legs pretty soon. We have not seen any kind of lift, any kind of bounce. Instead, we've seen it slam, hold, slam, hold, slam. And so that next slam could be taking us right through that LVN channel into 12.5 and perhaps get us close to the 9,300 CVPOC below. Taking a look at ETH futures. Ether futures here higher last week, down about 1% off those highs at the moment. This is 2 days back-to-back with strength, which has been very rare. We haven't seen many days of back-to-back strength in crypto here, especially the bigs. You see 1, 2, 3, 4, 5, 6, 7, 8, 9 days here. And again, here's the reading for that 9-day range. As much as about 900 points could be seen. Again, keep in mind, 900 points from where we currently are would be a tremendous crushing move if that were to play out. Even if we were to get the 750 point average, that would be a tremendous move. So again, if this thing were to push downward, we could be looking at the 717s next. That's the previous year's low. The 902.5 is the key range target. So again, if we see some sort of major flush here, we could be looking at 400, 500, 600 points to the downside, which could easily take us somewhere between 400 and 600 points on the chart here. So again, keep an eye on this. And 2 days back to back strong, but it's going to take more than that to really lift these prices here for Ethereum. Keep in mind, we do have Fed Chair Powell on deck Wednesday, speaking 30 minutes before the RTH Open. Friday is the first Friday of the month, but we do not have the non-farm payroll number until next Friday. So the second Friday of the month is when that will come out. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.